In this video, I'm going to go over the whole entire market in terms of Dow Jones, Nasdaq, and S&P 500, including the economic calendar. Now, we do have a jam-packed remainder of the week for Thursday and Friday, and I'm going to go over the economic calendar before I go over the technicals. And mind you, I do post these videos daily, so I highly encourage you to double-check the latest video on my channel, so that way you get the most up-to-date information. And on Thursday, September 26, 2024, at 8:30 a.m., we have initial jobless claims, as well as durable goods orders, as well as durable goods minus transportation. And then we have GDP second revision coming out. And then at 9:10 a.m., we have Federal Reserve Governor Adriana Kugler and Boston Fed President Suzanne Collins speak together. Then at 9:15 a.m., we have Federal Reserve Governor Bowman speak. 9:20, we have Federal Reserve Chair Jerome Powell gives opening remarks. So that's before the market again, 9:20 a.m. And 9:25 a.m., we have New York Fed President John Williams speak. And then at 10 a.m., we have pending home sales for August. And then at 10:30 a.m., we have Federal Reserve Vice Chair for Supervision Barr speak. And then at 10:30 a.m., we have Federal Reserve Governor Lisa Cook speak. And then at 1 p.m., we have Minneapolis Fed President Neel Kashkari speak, with Fed Vice Chair for Supervision Barr speak as well. Now, the one thing to note too, though, is for Friday, September 27th, it's very important because we have PCE inflation numbers. The reason why this is important is because the Fed looks at these numbers as more accurate versus CPI and PPI inflation numbers. And the reason why that's also important is because the Fed, yes, they're cutting interest rates, but this will kind of give the market of indication of by how aggressive they potentially could cut interest rates, right? In terms of how many points and so on and so forth. And mind you, again, core PCE year over year, which does not have energy in terms of the calculation in it. Previously, it was at 2.6. This time around, they're expecting 2.7, so a slight increase. But in my opinion, the media might spin as the PCE year over year without the core portion of it, because previously it was 2.5. This time they're expecting 2.3. The reason why I'm saying the media might spin it off of this one is because it shows that inflation is hypothetically decreasing. But mind you, the Fed looks at the data as it comes in, and the Fed is most likely going to look at the core PCE. So even though the market and the media might expect that, yes, inflation is coming down, I think the Fed still does their own thing hypothetically, and they always state as the data comes in, so on and so forth, then they'll decide on what to do in terms of interest rates, and this is what they're going to be looking at. So we'll see. In a way, by Friday, you can't really determine the movement of the market for Friday until these data points come out, right? Now for tomorrow's trading day, basically from the charts, if you look at the 1 year, the 5 year, and the alt chart based off the MACD lines, in case you're new to the channel, MACD lines indicate for a bearish or bullish movement. So right now, right about here, you can see it's in a bullish movement. But for all three of them, the S&P, Nasdaq, and Dow Jones, they are still in the bullish movement for the 1 year chart. But recently, they became light shaded green, so potentially could get pulled down. Not anytime soon, but the reason why I'm saying potentially is because for the S&P, we're at all-time highs, right? And then for the Dow Jones, all-time highs as well. And then for the Nasdaq, we're closely getting there. And if you remember from my previous comments before, if you look at the 5 year chart, we have an upward trend resistance line dating back since 2010. So the market was still going up, mind you. It's just every time it went up, got knocked down. And then in 2020 to 2022, broke through, then came back underneath that as of recent, had issues passing it in sometime in March of 2024, broke through in July of 2024. So I'm going to zoom in and show you. This was a breakthrough time period. This is the line dating back since 2010, right about here. Hopefully it's easy to see. You can see right about here, we had issues passing it. So this is the line. So in July of 2024, we broke through, created an all-time high with the rest of the market. This is Nasdaq, by the way. I'm looking at ETF QQQ, ETF for Nasdaq. Same thing, just different ratio. So the S&P, Dow Jones, and Nasdaq all created an all-time high in July of 2024. The problem was the market came down, and then the Nasdaq was back underneath the 2010 upward trend resistance line, and the Nasdaq had issues passing it, went down with the market as well. And then the Nasdaq is the only one that has not created a new all-time high dating back since July of 2024, but the Dow Jones and the S&P did. So the Nasdaq has not. Now, the reason why I'm stating that, not necessarily a pullback, but we might have some potentially, I would say, yeah, maybe a mini pullback in a way, is because we're approaching the 2010 level. Now, we did try to pass it in August of 2024, false breakouts as well, but we're slowly approaching it. So to me, that doesn't show that we have enough, for example, volume. You can kind of see the volume somewhat slightly dipping, but then it rose up. But it was mainly sales that was coming in, even though we were going up a little bit. I don't think we have enough momentum right now for the first test to break through. If that is the case with the S&P and the Dow Jones all-time highs, I think we might get a small pullback and then retest this 2010 level. Now, in case you're wondering what this 2010 level is, we're closed at $485.82 for the QQQ ETF for Nasdaq. And that level right now, mind you, the longer we take, the higher the high will be. So right now we're looking at pretty much about $490 and some change, give or take. Plus you have to account for false breakouts, I would say probably 491 to be safe, hopefully. But again, it could go a little bit higher. It doesn't necessarily have to be like that, because again, it could pass it by $3 and then get pulled back down underneath, and then pretty much get pulled back underneath and then keep going down from there. But mind you, again, because we're at all-time highs for S&P and Dow Jones, there's potentially for that. Now, the only thing is though, in terms of Thursday's trading day, based off the 1 year, and I'll show a couple of things too, actually. So if you look at the 5-year chart for all of them, the S&P is about to curve over to bullish movement. So the trend overall for the time being right now, even if the 1 year is slightly kind of curving down based off of last time it wasn't curving down, the overall trend right now is still to the upside for all three, Dow Jones, S&P, and Nasdaq, based off MAC lines. So 5-year chart right about here, about to cross over the bullish movement. The Nasdaq is the reason why I'm expecting a small pullback, because it's not really crossing over to a bullish movement yet. It still could, but because we have like times that we've tried to cross over and then get pulled back down, the S&P did the exact same thing, about to. So just because we're really close doesn't mean we're going to continue in the bullish movement. We could get pulled down, but because of the level we're at with 2010, plus the Nasdaq could get pulled down as well. The reason why I'm expecting a small pullback and then retesting the 2010 levels, right? And the Dow Jones is one of the main reasons why I think the uptrend is still kind of strong, because if you look at the 5-year, it's still relatively strong. And then just to show you the 1 year, I don't think I showed it. For the Dow Jones, the 1 year is showing a curve to the downside, right? We saw that big red candle, and that's for the 1 year. And then the Nasdaq for 1 year is curving down as well. So they're all curving down for the 1 year, but for the 5-year, it's pretty strong. I still think it's a small pullback, and then ultimately test once again the 2010. The second test, we'll have to see if we'll break it through for the 2010 for the Nasdaq. It's debatable. And then, by the way, for the alt chart, all of them are pretty much mixed for the 50-50. But again, for Thursday, I should go back to that point. For Thursday, the S&P and the Nasdaq show a slight increase in the early part of the day. I would say early to the mid part of the day. But ultimately, it looks like it might get pulled down by the end of the trading day based off the MAC lines of the 1 month, 3 month, and 6 month. And then for the Dow Jones, it looks like in the early part of the day till the rest of the day, it might be down potentially. The only reason why I'm saying that is also as well besides the fact that the MAC lines is we have a jam-packed day. So it could be constantly the market trying to potentially go up, but then every time it's waiting for the speakers. But for the most part, for the end of the day, it's because inflation numbers are coming out the next day. So I don't know if necessarily people want to hold through to the next day because the inflation numbers are coming out. So we'll see, unless based off of, it all depends on the narrative of the Feds, because we have a lot of Fed speakers tomorrow, by the way. Again, Jerome Powell speaking before the opening bell. So just him with the opening remarks could potentially spark something for the markets to go up, and the MAC lines are disregarded, right? But throughout the day, the Fed is speaking, and whatever they're stating could impact what the market is expecting for inflation numbers. So if the market is expecting some positive light for inflation numbers, or in terms of movement, what the Fed could be doing moving forward, then these inflation numbers could almost be disregarded by the end of the trading day of Thursday, where the market is optimistic and moving forward to the upside rather than coming down by the end of trading day for anticipation for the inflation numbers, right? So be mindful of that. And that's basically it for today's video. If you found it beneficial, consider dropping a like. It does help the channel, so thanks so much for that. I do post these videos daily, so I highly encourage you to follow and subscribe so you're notified when I do upload them. Thanks again for watching. Take care. God bless and peace.